Now for global business updates, Bosin Omofaye joins us. Good morning, Bosin.
A very good morning to the team, and once again to the man with the golden bow tie.
Yeah.
The man with the golden. Yeah, the golden finger. Let's get to oil prices. What is there? Okay, here you go. I know you're a gold finger. You're a gold finger. Yeah. And that's James Bond.
007.
Double.
Licensed to television, not to kill.
Okay, it's a Thank God Friday, by the way. Oil prices are higher a little bit today, supported by a surprise drop in U.S. oil inventories and the simmering Middle East tensions. But prices were headed for their biggest weekly loss in more than a month, and worries of lower global demand. Brent crude rose 0.52% to $84 a barrel by 6:41 GMT, while U.S. West Texas Intermediate was trading $71.12 a barrel, up by 0.64%. Now, markets in mainland China, Hong Kong rebounded Friday after the world's second largest economy posted better than expected economic growth. Overall, Asia-Pacific markets were mixed. China's third quarter GDP grew 4.6% compared to the same period last year, slightly above estimates by economists in a Reuters poll, but down from 4.7% in the previous quarter. Mainland China's CSI 300 was trading higher 2.19% as investors ingested the data. Hong Kong's Hang Seng Index was up over 2% in choppy trading. Japan's Nikkei 225 added 0.18%, and South Korea's blue chip Kospi slipped 0.6%. So the European Central Bank key interest rate was cut to 3.25% in its third quarter percentage point reduction of the year. The move had been fully priced by markets after policymakers flagged reduced inflation risk and a weakening growth outlook. In a statement following the decision, the ECB's Governing Council described the disinflation process as well on track in its most optimistic statement in the current cycle. Now, in corporate news, Blackstone plans to list some of its largest investments. The world's biggest private capital group said on Thursday, after sluggish asset sales hit its third quarter profits. Jonathan Gray, Blackstone's president, said a recent tech-fueled rally in global stock markets signaled a likely return of investor interest in initial public offerings. He argued that this paved the way for share sales by the group, whose global assets totaled $1.1 trillion. His comments apply to the bigger investments held by Blackstone, which are better suited than smaller companies to listing on public markets. Here in Africa, as it struggles with an unanticipated increase in inflation and concerns about a larger conflict in the Middle East, Egypt maintained interest rates at a record high. The Central Bank's Monetary Policy Committee said in a statement Thursday that it kept the loan rate at 28.25 and deposit rate at 27.25. All 9 of the economy's Bloomberg poll properly forecast the nation's fourth consecutive rate hold. Now, according to the World Bank, the elimination of the implicit FX subsidy is mostly to blame for the recent rise in federal government revenue in the first half of the year. In his presentation at the launch of the most recent edition of Nigeria Development Update entitled Staying the Course, Progress Amid Pressing Challenges, Alex Sinat, the bank's chief economist in Nigeria, made that claim. He claimed that the much-discussed gasoline subsidy that was eliminated in June last year was smaller than the implied FX subsidy back in 2022. Now, Nigeria has exited the Aviation Working Group watch list after achieving 75.5% compliance score on the Cape Town Convention Compliance Index. This development is an important step in opening up the nation's access to international aircraft leasing markets. After the Nigerian Civil Aviation Authority signed the irrevocable deregistration and export request authorization process on Wednesday, the AWG verified that Nigeria had been taken off its watch list. Now to the team. What are we watching?
Congratulations to Festus Keyamo, because, we all took that story when things didn't go well for Nigeria, but I'm happy he's been able to work very hard to revamp that. And when the story was sent in yesterday, I said congratulations to him. And 75%, we can only continue to consolidate on that and consolidate on also many other reforms. But going back to the World Bank saying governmental revenue increases the removal of subsidy. I don't understand what this World Bank is all about, honestly. They're playing a lot of very funny monkey business here. What governmental revenue increased? What increased it? Is it the subsidy removal? Is it the subsidy that we still went through a subsidy regime from last year up to this time that the NMPs just admitted that they're removing the remaining 100 and something now in the subsidy regime? Yeah. So governmental revenue increased so much, and we were taking a lot of debt. Between last year to now, we've borrowed about $6 billion from World Bank, and we're borrowing more. Governmental revenue increasing so much. Media, the president was talking about a supplementary budget. I don't know if he's still going to take it, but the year is also wrap up. But I don't think they should take it any longer.
Because the prep for next year's budget should
because
be
the prep for
now.
years should be afoot by now. So what is it really? Is it the destruction of the naira, as it were, making the currency weaker, making living conditions very hard for people? Is it the large-scale governmental bureaucracy? So we keep saying, okay, governmental revenues increase. So was it the removal of subsidy? Subsidy, they can't tell us how much they saved. Or was it really removed? The same World Bank said at some point that government had not removed subsidy, was urging the government. So what is World Bank saying? I don't see reasons why the likes of Walem or Julius Nyerere was actually very correct when he was always calling them the International Ministry of Finance. They want to be financing everybody. And they can't do it to the Western nations. I keep reminding them, their role when the Bretton Woods meetings held was also to be part of the International Bank for Reconstruction and Development. They should monitor that bit. They were not International Bank for cutting subsidies. They were part of those that supported the Marshall Plan, 14 billion. What we need is good money to incentivize our manufacturing sector, deal with debt capital, look at areas we've not looked at before, reforms in minings and the likes, looking at other areas of the economy, shoring up education potential, shoring up research and development, fixing the service sector to be able to bring about some economic fecundity, not telling us to die.
Well, I don't know how, when you talk about education, health, and infrastructure, yes, the World Bank has said they've approved a financing of up to $1.57 billion for Nigeria in these areas to fund education, health, water, and water treatment projects. And like I said earlier, this is part of the reason we have a revenue crunch. And one of the ways is through loans from the World Bank. And they said that they were not going to stop. Nigeria is a critical partner in their development plans, and they were not going to stop giving money to the World Bank. So with this administration looking for revenue, it's in a tight position, and that's perhaps why they have to toe the line of the World Bank. But in doing so, country must come first. And this is what a number of people have said, that whilst we're trying to get some money, attract the World Bank by putting in these reforms and staying the course, as the update is aptly named,
yes,
they must also still think about the impact on the Nigerian people and to ensure that money is being secured from institutions like the World Bank actually go to infrastructure. That we can actually see the benefits.
The kind of money we should be attracting is less of the World Bank, more of FDI.
Yes.
Unfortunately, that is not what we're getting.
And and if we keep
which is free money. FDI is the free money that help
absolutely
create jobs and all of that.
Absolutely.
But if we don't get of FDI, so what do? We keep borrowing.
We keep borrowing. Now moving on to the the Aviation Working Group.
Yes,
I want to emphasize on that, because I think it was last week or 2 weeks ago when I talked about prices, the effects of some of the moves by the Minister of Aviation, that he needs to look into that. And part of the benefits of this, of our compliant level going up to 75.5% is that now with airline operators having access to more leasing, financing, dry leasing, we can then have competitive prices. Routes will be more, they can diversify and have more service routes. And of course, it trickles down to the people. That's what we're talking about. When we talk about these big wins in government, we want to see the trickle-down effect on the people, because that's the main aim. That's the aim after all. So just to mention that. So kudos and well done to the Ministry of Aviation.
Let me start with China. Now, the GDP third quarter growth, was expected to be 4.5% by analysts, but it came in at 4.6. So, that movement is a bit symbolic. Some reporters have described it. 4.7 in the second quarter, 4.8 in the first quarter, but all this is still below the projection that China should be able to do around 5%. So what China is looking at now is to see how more stimulus can be provided, by end of the year, so that they will get very close, or they will be able to make that 5% target. The part of the story that you left out was that yesterday, the president of the People's Bank, chairman of the People's Bank of China, had a press conference, or in fact this morning, because of the difference in time. And he is saying that there will be more stimulus packages. Two, that the 7-day repo rate would be further reduced by 30 basis points. that the medium lending rate will also, be reviewed, and also that interest rate cut between 25 to 50 basis points should be expected by year end. And the expectation is that this will further drive, the economy towards that 5% target. As for the ECB, now Christine Lagarde was very optimistic. She says, well, there's disinflation that is on track. After all, headline inflation in the euro area is now 1.8%. She says the inflation may go up very briefly, but by next year, they should be able to hit, the 20% inflation rate target, total. But generally, the Governing Council of the ECB was unanimous in discussing 25 basis points. And it says that's because economic growth is a bit lower than expected. Finally, at Amazon Cloud, the workers there have been told that if you do not obey the 5-day show up in office plan that has been announced, you can go and work in another company. About 37,000 of them have gone online to say, well, they prefer to work from home, remote work, they call it. But the CEO says, well, anybody that is not happy with it can go and work in another company. That you now have to come to work. After all, COVID season is over.
It's over.
Thank you very much. Thank you very much, Jose.